Assalamualaikum warahmatullahi wabarakatuh. My name is Andi Putri Ahira.
My name is Muhammad Nugraha.
My name is Liani.
My name is Denzel.
My name is Fransiska Yasmiati. I am from Group 5. So, understanding in general, capital market is a meeting place for sellers and buyers to conduct transaction in order to obtain capital. And the second, any capital market instrument. In conducting transaction in the market, goods or services are usually traded. The capital market instrument trader are in the form of securities that can be resolved by their ownership, whether the capital market instrument are ownership or debt in nature. Ownership instruments are realized in the form of shares, while debt instruments are realized in the form of bonds.
We refer to sellers and buyers in the capital market as players in transaction on the capital market. The players consist of the main players and supporting institution whose job is to serve the needs and smooth running of the main players. Major players in the capital market is a company that will make sales or issuers and buyers or investors. First, we have issuers. What is issuers? Issuers are companies that will sell securities or issue on the stock exchange. In carrying out issuances, issuers have various objectives, and the issuers' objectives to obtain capital have also been stated in the GMS. Second, investors. Investors are the second player who will buy or invest in companies that issue. The following are the main goals of investors in the capital market, such as first, earn dividends, B, company ownership, C, trade. Third, supporting institutions. The function of supporting institution is to participate in supporting the operation of the capital market. Supporting institutions have an important role in the capital market mechanism as follows. A, underwriter. The part of underwriter is like full commitment, best effort commitment, standby commitments, and also all or non-commitments. B, securities trading broker. C, securities trading. D, guarantor. The guarantor is an intermediary between the giver of trust and the recipient of the trust. E, trustee. The trustee represents the investor in the bond. F, securities company. G, fund management company. H, securities administration office. First, government agencies. What is government agencies? Is it an institution or government agency assigned to support the securities trading process in the capital market? Government institutions related to capital market activities are as follows. Capital Market Implementation Agency, or we can say BAPEPAM. Investment Coordinating Board, or BKPM. Technical Department and Department of Justice. Next, private institutions. Private institutions that are closely related to the capital market include A, notary public, B, legal consultant.
Emission procedure. Emission procedure must be carried out according to predetermined stage. The emission procedure and stage are as follows. The first stage of emission, any preparation phase, submission of letters of intent, submission of a registration statement, evaluation by BAPEPAM, and open hearing. And then number 2, any emission requirements. Registration and listing permit is granted by BAPEPAM. After that, the issuer must list at least 90 days after registration permission is issued. Continue, primary market. The primary market is the offering of securities after issuance permits. The stage of offering securities in the primary market are as follows. The first, announcement and distribution of prospectus. 2, the offer period. 3, the allotment period. 4, payback period. 5, submission of securities. 6, listing of securities on the stock exchange, and the last 7, secondary market.
Money market. Money market refers to a section of financial market that related to trading activities or short-term funding with maturity up to 1 year or less. It enables governments, banks, and other institutions to fund their short-term cash flow needs, also allow investors to invest in a low-risk investment. Purposes. There are 2 participants of money market. The first one is those who need funds or borrowers. Borrowers collect funds from money market because they want to meet short-term funding needs such as paying off debt that are due soon, to meet liquidity needs, meet working capital such as paying debts, or they're in a clearing loss condition. The second participant is those who have excess funds or lenders. Money market adhere providing these lenders as a stable investment with less fluctuation. There are 8 money market instruments. The first one is interbank call money. It refers to a loan among banks in clearing process to assist commercial bank in meeting their immediate liquidity requirements. It has maturity between 1 until 7 days. The second one is Bank Indonesia certificate. Is issued by the central bank with certain amount nominal value and usually linked with government regulation to control the supply of money. The third one is certificate of deposit. It is a certificate issued by the bank that can be cashed after the maturity or sold either to institution or common people. It issued to in certain amount and have a maturity date ranging from 3 months to 5 years. The fourth one is surat berharga pasar uang. It is a marketable security issued by commercial bank in form of money order or promissory note for trading with central bank or other participant. The fifth is banker's acceptance. It is a bank draft that stands with accepted word and usually facilitate the trade between importer and exporter among countries with maturities ranging from 30 to 180 days. The sixth one is commercial paper. It is a marketable security issued by finance or non-finance company with maturity up to 1 year or less. One of the form of the commercial paper is the promissory notes. The seventh instrument of money market is treasury bills. Treasury bills in Indonesia can be equated with Bank Indonesia certificate. And the last one is repurchase agreement. It is a form of short-term securities that traded at discount with written agreement that the seller will repurchase the securities.
So foreign exchange market, referred to as Forex, is a market in which the currency of one country is exchanged for currency of another countries, that the transactions are conducted between countries or within a country. Forex transactions can be done by a company or individuals by using exchange rate. It could also be done between banks and their customers. In international foreign exchange market trading, the currencies that are often traded are currencies that are considered as or classified as convertible currencies, or the most valuable currencies, such as euros, US dollar, Canadian dollar, and so much more. There are several purposes of doing forex transactions, such as to make payment transactions. The second one is to maintain purchasing power. The third one is to send money abroad or to transfer money abroad. The fourth one is to find profits or to gain profits. The fifth one is hedging, or a transactions to avoid loss due to changes in rates. And the sixth one is simplicity and shopping. There are 3 types of forex transactions. The first one is spot transactions, which is a transactions of whose settlement time is made within 2 business days. The second one is forward transactions. Forward transaction is a customized contract between 2 parties to buy or sell an asset at a specified price on a future date. And the third transaction is swap transactions, which is an agreement between 2 parties to exchange sequences of cash flows in a set period of time.
Trading. Margin trading is the facility that is made for investors with small capital. This service is very profitable because it can serve the purchase of stocks in an uptrend. Margin trading providing loans to customers to be used to buy shares in larger quantities than the funds they currently have. One of the cases are, Budi wants to buy 1,000 shares of ABCD for 30,000 rupiah per share. This means that Budi must prepare funds of 30 million rupiah for the transaction. When ABCD's share price rises to 40,000 rupiah, the profit will be 10 million rupiah. Benefits of margin trading. One of them is holding periods for stock transactions are more flexible and costs are lower than regular accounts. The customers will receive a warning to pay off his margin loan. The cost of using the margin facility is also lower. And it can also be used for a solution for customers who want to increase their profit opportunities. Next is the disadvantages of margin trading. One of them is capital loss risk and also risk of unable to pay or default. Next is trading margin of foreign exchange market. Margin trading is a foreign exchange buying and selling transaction that is not followed by a movement of funds, and what counts as a profit or loss is the net difference between the purchase or sell price of a type of currency related at the end of the transaction. Bank of Indonesia issued provisions regarding foreign exchange margin trading activities as stipulated in the policy package of 28 February 1991. Interaction between foreign exchange market and financial market. Selection of funds in the money market always related to the forex market. This means that if you want to invest money in the money market, you must consider and determine which investment is the most profitable in the money market or foreign exchange. The interaction between the money market and foreign exchange becomes more important when the amount of funds available is large or when economic conditions are not good.